traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Monday, 11th day of June, 2018, and this is the Daily Report for Gold and Silver. With just a few hours until the historical summit commences in Singapore between the United States and North Korea, we have muted action in the financial markets, with gold trading higher but only up about $1.70, closing at $1304.40. Silver, however, did have a big move now for a third day in a row, touching $17, closing at $16.95, a net gain of 21 cents on the day. Dollar fractionally unchanged, up 4 points, 93.58, and a 5-point gain in the Dow, 25,322. The biggest mover today was a 11% drop in Bitcoin futures, moving to 67.70 and 67.65 in the CME and CBOE futures exchanges. Traders, we are just hours away from the beginning of a historical event, the summit between North Korea and the United States. Depending on the outcome of that summit, we could see some increased volatility, not only in the dollar, but especially in the safe haven asset class such as gold. Currently, we do have gold trading higher, although only fractionally higher at $1304.40, putting it up about $1.70. There are a couple things that we can say that are noteworthy. However, given the upcoming FOMC meeting, as well as the summit, which will commence later on today, anything is possible. But in terms of what we have seen a series of higher lows and higher highs. We can definitely make a case for the fact that the lows that were achieved mid-May around 1281, in fact, were the lows of the correction that began when the market topped out at 1369 and began to track lower. We have seen the market only on one occasion actually go and trade back above the longer-term 200-day moving average. That is this candle right here. And as long as we are witnessing trading like this, we can effectively see some resistance at the 200-day moving average. Of course, to move back into a bullish stage on a technical basis, prices have to not only take out the 200-day moving average, but also the 50-day moving average, as they were when the market was moving up. Inasmuch as we are currently positioned with a long trade in gold, roughly at the same price point and our stop in place, my recommendation is to maintain our current long position in gold and to maintain our current stop. The big mover over the last 4 or 5 trading days has obviously been silver. Silver has been a runaway freight train, so to speak, gaining about 21 cents today and closing just shy of $17 at $16.95. We absolutely can say that we have some resistance that has come in at the 50% retracement. We talked about that a little bit on Friday. And the positive aspects have been that we've had effective closes above the shorter term 50-day moving average, as well as the longer term 200-day moving average, with today's move opening above that average and closing well above that average. The key, though, is on a longer term basis, we really want to see these two moving averages come into alignment, where the 50-day moving average, the short moving average, is above the longer-term 200-day moving average. We can see that we have that slight hook in the 50-day moving average, but once again, we would have to see this move up and the 200 move down. For right now, all we can say is that we have now come once again up to the upper levels of the trading range that silver has been in, really, since February of this year, after coming down from these highs at around 1770. We have only seen one instance or one period in time, and that came towards the end of April, in which we jumped well above this 50% retracement at approximately 17, and then tracked right back into the congestion area that has been so prevalent in silver. And lastly, a look at Bitcoin futures, literally falling out of bed today. losing over 11% in value, about a $900 drop as Bitcoin futures go to 67.65. If you recall from our commentary over the last couple of weeks, as it had traded in the narrow range and hit our original downside target of about 7,200, my sense was that we had to see it effectively break above resistance, which was at 7,700, or a break below the support level at 7,200. And if in fact we did break this particular support level, I said and am still on record believing that Bitcoin will make a stab for these lows at around 6,400. For right now, I remain bearish on Bitcoin futures and think we could see lower pricing. Traders, of the trifecta that we spoke about last week, the first of the three is over, and that was the G7 meeting that occurred over the weekend. That ended with some friction, although we haven't seen how that's going to eventually get into the marketplace in terms of strategies. However, we do have the summit commencing today, and then tomorrow the FOMC meeting. Both of them promise to have the potential to move the markets considerably. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.